third piece on First Word, and from the micro come macro to what is largely macro. We've spoken enough about flows, spoken enough about what the gains are, but it's important to highlight the behavior of offshore funds and exchange traded funds in calendar year 2017 when we speak about how FIs have not liked India. And here's some data to kind of counter that. So India focused offshore funds, there's a Morningstar report that came out, and ETFs. In the month of November, there was an inflow about $565 million odd. This is in stark contrast to what happened in November last year. But you can understand last year, November was also the demonetization month. But so overall fund inflow tally nearly reaches about $6.5 billion in calendar year 2017. Now I want to show what the relevance of this number is in context of what's happening across the world. And there's a very beautiful chart on the Bloomberg terminal that will now come about. And if I can, okay, so it's split into two, and I want to first focus on this line. If you see, Brazil received the highest flows at about, at this number, which is double the number of India. This is ETF dedicated flows only, not offshore funds. India second highest, and India is double the third highest. So there's been a stark contrast in the preferences that ETFs have had towards emerging markets by and large. And now let me show that graphically what the importance of this number is. If I put all of these bubbles on what is, well, in a manner of speaking, a heat map, this is what Brazil has done, the highest, and the size of the bubble fairly large, and you can see why, because it's received the highest flows. But you take the screen to Asia and you will see the size of the bubble in India is second highest at 1500, and that's substantially large. If I can just drop this box a bit below, if you can drag this box below, look at China, the quantum of outflows. Look at what some of the other emerging markets have had. There are inflows, but not so high. China has had huge outflows. And now compare this bubble to rest of the world, aside of Brazil, and if you can draw the camera out, aside of Brazil, which is high, there is virtually no other bubble which is as large as India. And I'm using the term bubble in a positive way out here, not in a negative way. There's a fair amount of inflows from ETFs that we've received. And while you argue that ETFs may be short-term in nature because of the easy exit option that ETFs provide, the offshore dedicated funds in India offshore dedicated funds haven't been back either. So while there are some outflows that we've seen in the months of October and September, and maybe the months before that as well, November marked a big inflow month as well. December has not been too bad. And if you just look at the data on ETFs and offshore dedicated funds, it clearly shows that while there may have been sporadic periods of outflows, we've not been disliked on the equity flows at all. We've spoken at length about how the bond markets have received substantial flows, and rightly so. Ira made a point yesterday with the bond yields moving up as well. You don't quite know how will the bond investors behave in calendar year 2018. I think December was a good month for bond inflows as well, relatively. Yeah. But hey, you know, ETFs and offshore dedicated funds in equities has not been a bad period. So we crib about what we've seen in October and September and maybe a month before that. But I don't think it's been all that bad if you look at the year as a whole.
No, that's a fabulous looking chart, but makes an important point as well. So India in the pecking order third, right? I mean, Brazil, India, Vietnam.
So second in the pecking order in the emerging market space.
Second in the emerging market.
And almost double the size of the third place. And of course, Brazil is double India as well, which is a separate story altogether.